Technical analysis in share market, key points. Technical analysis is a method of analyzing financial markets that is based on the study of market data, primarily price and volume data, to identify patterns and trends in market movements. The main goal of technical analysis is to predict future price movements by analyzing historical market data. Technical analysts believe that all relevant information about a particular financial asset is reflected in its price and volume data, and that this information can be used to make informed investment decisions. Therefore, technical analysts use a variety of tools and techniques to analyze market data and identify potential trading opportunities. Some of the most commonly used tools and techniques in technical analysis include charting. One of the key tools of technical analysis is the use of charts. Charts are graphical representations of price and volume data over time, and they allow analysts to visually identify patterns and trends in market movements. For example, a technical analyst might use a line chart to plot the closing prices of a stock over a period of time, and then look for patterns in the data that might suggest future price movements. Common types of charts used in technical analysis include line charts, bar charts, and candlestick charts. Technical indicators. Another important tool of technical analysis is the use of technical indicators. Technical indicators are mathematical calculations based on price and volume data that can help identify potential market trends or turning points. Some commonly used technical indicators include moving averages, relative strength indicators, and Bollinger Bands. Support and resistance levels. Support and resistance levels are price levels at which a stock or other financial asset has historically shown to have difficulty moving beyond. Technical analysts use support and resistance levels to identify potential entry and exit points for trades. Trend lines. Trend lines are lines drawn on a chart that connect a series of price highs or lows. Technical analysts use trend lines to identify potential trend reversals or confirm existing trends. Volume analysis. Technical analysts also analyze trading volume, which is the number of shares or contracts traded in a particular time period. High trading volume can indicate a significant price movement, while low trading volume can suggest a lack of market interest in a particular asset. While technical analysis can be a useful tool for investors and traders, it does have its limitations. Technical analysis is based on the assumption that market participants behave in a rational and predictable manner, which may not always be the case. In addition, technical analysis can be subject to interpretation, and different analysts may interpret the same data in different ways. Therefore, it is important to use technical analysis in conjunction with other forms of analysis, such as fundamental analysis, which considers factors such as company financials, industry trends, and macroeconomic indicators. Combining different types of analysis can help investors make more informed investment decisions and manage risk more effectively.